We're innocent bystanders here. We're separate authorities. They have their charter and franchise, and we have ours. Each of us are created by the sovereign powers that gave us our charters. We are the central bank of the United States. The ECB is the central bank of Europe. The difference, of course, is that we have one fiscal authority. It may not work as smoothly as we would like, but it's a little bit better than having 17 fiscal authorities that they have to deal with. So other than the swap lines that we provided for dollar demand, and that's to facilitate dollar-driven businesses around the world, there's really nothing we can do but cajole them, advise them, if asked, and give them the best advice that we can. This is their deal. They are Europeans. We are Americans. And never the twain shall meet.
Do you think that it would be appropriate for Greece to default?
I'm not going to say a word about default. I do note that they have put a very good friend of most of us at the Federal Reserve, Papademos, in charge of their government. They're turning to technocrats. So I would give credit to those that have made those decisions. They're doing the best that they can. They're in a very difficult predicament. They do have to work not just with the ECB, not with just the Stabilization Fund and Authority. They have to deal with the bond market vigilantes. And this is a powerful force that you cannot escape, whether it's those that decide to buy sovereign debt or the debt of the banks that finance the sovereigns. And that's a powerful force. And I think it's very, very important that these new technocratic governments and the people they represent demonstrate to the bond markets that they're serious about getting their houses together.
Well, but we've already seen Italian bond yields, 10-year yields, go above 7%. I mean, at what point?
And a government fell because of it. This is a good lesson.
Right, but at what point
This is a very good lesson, Felicia, for our own politicians. This could happen here easily.
What, our 10-year would go above 7%?
No, I'm not saying a level. I'm just saying that we have been the beneficiary of being the best-looking horse in the glue factory, as I've said before. We've seen a rush into dollars.
It's not such a pretty factory.
It's not such a pretty factory. So they ought to put us together back as the best-looking stallion and the most beautiful filly.
You know, when you look at the state of things, do you really expect the Super Committee to be able to achieve what it's intended to do by the date of November 23rd?
There is good news surrounding this. At least, A, they're talking about it. B, they've seen the consequences of what happens with European nations that do not impose fiscal discipline. And C, they know that the Federal Reserve has limited powers. I work for the Federal Reserve. On either side of the aisle, none of them can possibly expect that monetary policy will bail them out of the fiscal hole in which they have dug themselves. We're reaching the point where decisions have to be made, and even if they punt here, I don't think the voters will be terribly forgiving. They're going to insist. This is what the last election was all about, and whether you are an Occupy Wall Street type or a Tea Party type, the message that's been sent is social unrest will ensue unless you guys get your act together.